Hi, let's talk about Ocugen. It's been a while since I made a video of it, and it's a clinical stage biopharmaceutical company that focuses on developing gene therapies to cure blindness diseases, and also they have followed drug pipelines that they researching. So there's 3 drugs that are on follow phases. So retinitis pigmentosa, it's a drug against that disease. It's on a phase 1, so phase 2 clinical trial. COVID-19 vaccine, phase 3. And also this draft versus host diseases on the phase 3 trial. Stop it early due to influence in the efficacy. So on last year's June. So most probably they researched this one and also the other one drug. So COVID-19 and there's retinitis pigmentosa against drug. Anyway, let's talk on the fundamentals. Market performance, market cap is 1.5 billion already, so they grew a lot since I researched the stock. Snowflake analysis shows future growth 5 out of 6, financial health 4 out of 6. It's trading 73% below the size estimated fair valuation, so it has stock targets that are higher than current price, and also earnings are forecasted to grow 40% per year. On the risk side, so it makes less than 1 million in revenue. I'm not sure where it comes to the minus side, minus 380. And but let's check this later. Volatile share price, basically they had, if we open this one up, they have this spike of February as many of the biotech companies, but then it decreased within few months, so till 65%. Then it hit once again top 184% return, and those who invested then are currently minus 50%. So that is the volatility on the biotech companies. And shareholders have been diluted in the past year. I think they printed some shares out. Yeah, shares outstanding keep increasing. Latest share price and events. So they had, I think, a lot of legal issues, and there was bylaw change, earning updates. Anyway, this is leading to market performance. So as you can see, 1-year return 1,447%. That's a lot. Of course, it outbids the industry and also the market. Long-term price volatility considered as lowest. I think they don't have the 5-year volatility relative to market, so it's not accurate. Valuation side, basically simple. Wall Street shows that fair valuation should be around $27 per share. Tip ranks, if we open that up, 8.88, 21% upside. 12-month forecast, $15. So we see pretty much on the market watch. In good scenarios, stock price target at the highest point, 15. So there's a X2. So if it turns very well for the company, if they move forward with the COVID-19 vaccine, because the phase 3 data from the partner noted efficacy rate of 78%, 93% against severe diseases, 65% against the Delta variant. That is pretty good, and we're finding to be submitted instead of FDA emergency use authorized application. So as you know, there's on the other COVID-19 vaccines, there's FDA's admitted the emergency use, but I'm not sure, do they have to file some other way that kind of question. Anyway, let's move forward. So future growth, 40% forecasted annual earning growth. As you can see, they might be selling already from the next year. Yeah, actually within, yeah, end of 2022. Yeah, pretty much next year. But it's only the analyzed forecast. Earnings per share is forecasted as well as to grow, and they might become profitable next year, end of next year, based on simple Wall Street. Past performance, historical annual earning growth decreased by 33%. As you can see, they had less spendings earlier. Now it decreased, yeah, 47 million actually. And revenue is somehow managed to also be on the negative side. I'm not quite sure where this come from. Did they return the revenue or something? Not sure. And currently the company is unprofitable. On the financial health side, we see that they printed shares out, so they got the cash, 150 million for the researching. So now they have money to invest in the product. It's pretty good. And debt to equity ratio is 1.4%, so they have a little bit of debt, 1.6 million. But basically good news is that the cash is enough to cover the debt, and they don't have negative shareholder equity. Equity 116 million. Balance sheet looks green. There's a little bit red dot there. And they're not paying dividends. Let's skip the board information and ownership. Yeah, so there was no inside transactions. Ownership breakdown: general public holding 68%, institutions 28%, insiders 2%, private company 0.4%. Top shareholders, yeah, as expected, they are not now loading once again the stock. BlackRock added. Last reporting holding date June, end of June, and also the Vanguard end of June. There's a lot of I see only two decreased. So there's the individual, the member of the board directors, co-founder, independent director, sold almost 30%, and that was July. And also one of the companies decreased, but not significant, or less than 2%. And other increased, so since that was reporting in June, let's take a closer look at the price then, 30th of June. Yeah, so if they loaded up with this number, $8 per share, and the peak was, if we open this one, in February 8, $18 per share on the highest point. So I think this is short-term trending up. There's a big but. If they continue to print the shares out, diluting at the same time the shareholders, that could be affecting on the price target. So that's a big risk. But since they printed out, so they do have 115 million, I guess they have to somehow manage with this money. And yeah, but we'll see what's happening. And yeah, sales dropped to from the 42,000 to minus 380. And yeah, so pretty high volatility on the market, so be careful. This could drop even to 550. And investing.com summary the stock for long-term investors as a neutral. And let's have a look at the, yeah, so that is disliked comment, but anyway, holding 1000%, I'm selling. Dislike. Yeah, so there's a lot of speculation going on in the comments, so be careful of others pump and dump stocks and try to diversify your portfolio, and by time, by industry, by proportions, and so on. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.